So next, we're going to talk about opportunities in the market. And we're very, very fortunate to have assembled a diverse panel of investors on here. How you determine which sectors or regions present the best opportunities in the current market. And we'll start with Lisa.
Thank you first. So on the best opportunities on the secondaries market where we play, right now, over the past few years, because of the lack of distributions in private asset classes, specifically private equity, but venture capital obviously seeing that pain as well. The best opportunities we're seeing today is really LPs looking to generate distributions from their private portfolio. They typically would hire an intermediary to run a process to figure out kind of what part of their private market portfolio would generate the best pricing and sort of the best size to get to what they want to get to in terms of that desire for liquidity or desire for distributions. And so in our market, we see both these LP-leds, so LPs selling a portfolio of companies or funds, that's an LP-led. And then we also do what the market, it's a sort of a growth area in the market these days on the secondary side, is GP-leds. And what GP-leds mean is a GP comes to us and say, I want to offer liquidity to all of my LPs in my fund. So ultimately, as a buyer, we're still transacting with other limited partners. But the difference between LP and GP-led, on an LP-led, we're buying from one seller, but multiple funds. And then on the GP-led, we're buying from multiple LPs, but typically one fund or sometimes even one asset. And so if you hear of single asset continuation vehicles in the news, that's what a GP-led single asset continuation vehicle is. So those are the two type of opportunities that we're seeing the most amount of growth in the secondaries market. And in terms of stats, I'll just throw out there, this year we expect total secondary volume to be about $140 billion across private equity, venture capital, a bit of private credit secondaries, a bit of infrastructure secondaries as well. So when I started after the financial crisis in 2010, that number was like 10 billion. And so this market has grown tremendously over the past few years. And then most recently, because of the lack of distributions by LPs, it has caused more sellers to come in and sort of get some kind of pricing on their private market portfolio.
And actually, in our data, we're seeing that secondaries are expected to grow at a 13% CAGR, the fastest subset of any strategy over the next 6 years. So thank you for that, Lisa. Greg?
Yeah, absolutely. And thank you very much for the opportunity to be on the panel. And thank you all for joining me on the stage. The Next Investors makes growth equity investments in the technology companies that are focused on the financial services industry, and this is the institutional and capital market side. So a lot of the trends that we're talking about today, a lot of trends of like all these things are growing, and the panel before us and all the AI, all of the tools that make all of that work, that enable financial services market participants to actually use that, to get that insight, to see that, to implement those solutions, are provided by companies that we like to invest in. And if you look across all of that space, really, I think the big trend here is this increasing complexity driven by products, driven by competition, driven by the desire for managers to deliver alpha, is increasingly being enabled by third-party technology providers. So in the past, you might build something yourself as an institution. You'd have a large IT infrastructure, and that would be building new products, writing code, and that is less and less the case, and more case that you need the interoperability and you need the ability to be dynamic that you get with third-party technology solutions, and that's what we're looking to provide. And just for some examples now, it's broader things. It's a situation of how can I get a non-technological person to do something that would have required a technology professional before and deploy quicker to a business analyst, and how can I get things like I can take in a lot of information, but then I need to execute separate. How can I combine those things? Those two major trends are driving a lot of the technology spend because of the added efficiency and the ability to audit and go back and say to the regulators, like we heard in the prior panel, how did I do all this? Like, can I actually show you that I did all this? It used to be done manually, and now you need more automated ways to doing that. And those are the technology companies that we think are going to be successful as these trends continue.
Thank you. Michael?
Sure, thank you. So Mirae Asset is a multinational asset manager with 600 plus billion AUM in 20 different countries. So you can imagine that all this strategy are here. So there's probably someone in the organization managing something like that for us. Where I sit in kind of the full spectrum is on later stage venture growth in a generalist format. So thinking about things from a more macro perspective. And when we think about where we're interested, we look at categories that we think are going to drive material value in the global economy going forward. And we've had a whole panel on AI. I can talk until I'm blue in the face about all the different areas there. I think the one thing that how we think about this is maybe a little bit different is that we tend to be a little more patient, where when you're investing into something that can have such an obvious transformative effect, when you're just riding the hype train, that's where bubbles are built. And when bubbles are built, ultimately there are some really great companies that come from this, because the companies that are actually driving the category, and we deem them category winners, are the ones that accrue 90+% of the value from said category. So to just throw anything at something that has the word AI in it can sometimes find you in trouble, and will likely find you in trouble, but actually dissecting, being patient, and figuring out which of these companies is actually innovating and driving forward where the category is going and infiltrating into kind of sub-markets that also have a big enough kind of market opportunity is where we spend most of our time.
Thank you. Lee?
Sure. So from a market opportunity standpoint, Schroders Capital and its private equity business is very global in its framework, about 19 billion in assets, and we have professionals in States, Europe, and in China and Singapore. And so we look at the entire global private equity marketplace, from venture to buyout, across each of the investment types. And so we do have a relative perspective on the areas that we find more attractive than others today. And I think we're coming into a period now where the markets are beginning to wake up a bit, and look at particularly the buyout segment marketplace, and especially the lower middle market part of the marketplace. So the corrections that's developed in the market over the last, say, 18, 24 months has provided us, I think, with a very attractive entry point to deploy capital in lower middle market buyouts in the States, as well as Western Europe, less so maybe in Asia. And then on the venture side of our business, where we're mostly focused on seed and early stage investing, and to a lesser degree later stage financings. We're very much focused on technology, particularly AI investing in the States and in Europe, to a lesser degree in China, because there's obviously some troubling dynamics going on in China. But we do have clients in Asia with strong interest in China. There's a tremendous amount of value in China today, given the flight of capital, but it's hard to stomach from this seat in New York to do that in the liquid asset class. And so I think the markets have settled out over the volatility of 22 and corrected themselves in 23 and into 24, and we see the seeds of opportunity developing themselves for the coming cycle before us.